Welcome to Illuminati Silver. We tell you the truth about silver. Today is Monday, the 27th of July, 2020. And on Saturday, we publish our Gold and Silver Weekly Update for the week ending the 24th of July. And we place a link to this video in the description box below. Now, in that update, we pointed out that whilst we expected gold to test all-time highs, and that $2,000 an ounce was possible this year, we also admittedly stated that we expected a pullback early this week, until we heard what the Fed had to say on Wednesday. We also pointed out that some analysts were predicting $25 silver, but again, we were anticipating a pullback. Well, we have to confess that pullback did not occur today. From the very opening this morning, gold shot up almost immediately, actually touching $1,946 at one point. It's currently $1,936 as we write this, so it's up $34 on the day. Silver did the same and at one stage actually reached $24.61 and currently rests at $24.36. That's up over $1.50, $1.58. The most notable aspect today has been quite a considerable fall in the dollar value, particularly because of expectations of lower yields and the potential, though we doubt it, of lower rates in the US being announced this week. The dollar index is currently down 0.8 at 93.6. Now, ordinarily, we would say from a technical point of view, we would expect gold to fall back to just below 1900 at 1895. That's where we see the support level. And possibly falling to 1877, which is the next major technical support level. This we would expect before it then decides whether or not to make another leap forward, which we believe it would. However, if we actually see gold rise above today's high again tomorrow, then it will almost certainly attempt to extend to 1971. And if that then holds overnight, then $2,000 will be reached much sooner than the end of the year. In fact, this coming month, August, we suspect. Now, as far as silver is concerned, $24.60 is the next resistance level, and it's not far from that at the moment. Again, it will have $25 in its sights. And should it, we're not expecting it to, but frankly, should it motor past this as it did $24 today, then we have to admit it's almost a free jump to close to $27. Now, before we comment further on this, it's worth noticing that the Dow Jones is currently up 65 points. The S&P 500 is up 19 points. The Nasdaq is up 145 points. And European markets closed virtually unchanged or marginally into negative territory. So equity markets are still very robust. But this is all about dollar weakness plus a few other geopolitical issues. And an expectation of even more stimulus and more QE from the Fed on Wednesday, even if lower rates are not announced. You see, Fed Chair Jerome Powell made it clear back in June that the Fed remains fully supportive of the economy and markets, and therefore this inevitably means more stimulus, more QE, and will prove a downer to the safe haven US dollar. Now, we remember stating on Saturday that as far as precious metals were concerned, quote, the trend certainly continues to seem positive, as we must not forget that the equity markets themselves have remained robust. Just imagine what would happen to precious metal prices when equities seriously start to fall. Now, we're not expecting them to seriously start to fall yet because more and more money is being pumped into them. However, we are now in somewhat uncharted territory. We have more money being pumped into the world economy than has ever been, with guarantees for even more. China's economy is moving out of, okay, we'll call it a recession. It didn't actually go into recession, arguably, but moving out of its significant lull. And some economic data coming out of the United States has been positive, though the job numbers may prove yet again disappointing because of COVID-19. And a number of businesses that have opened may, in certain states, have to close again. You see, with the US about to reach 150,000 deaths, and rising on average close to 1,000 a day this past almost week, not quite, global concerns about a sustained recovery have caused considerable concern amongst investors and therefore their flight to precious metals. Now, we mentioned last Thursday that COMEX contracts rocketed as gold reached for $1,900 and silver had then surpassed $23. And if you haven't heard that video, we've put a link below. Now, yesterday we were planning on providing a video on what the Fed is likely to do on Wednesday. But again, the data we're receiving from the various banking institutions is quite frankly mixed. The general tenor will be more of the same. But there are one or two issues, as there are slight differences now beginning to emanate between the European Central Bank, the Bank of England, and the Fed. Now, what is interesting, though, is an article published by Bullion by Post today, which encapsulates really quite nicely our view of what is actually happening. We'll quote some of it, not the whole article, but the pertinent part. It goes like this, quote, "Predictions from the accountancy firm Ernst & Young that the UK economy may not fully recover to pre-COVID levels until 2024 highlights the long-term concerns facing investors. V-shaped recoveries are considered unlikely now, given the increasing number of cases of coronavirus around the world. Both gold and silver bullion have also hit dramatic highs, measured in Indian rupees and a host of other emerging market currencies. There are currently many factors leading to these ferocious rallies in the gold market. A global economic crisis from the coronavirus pandemic and worsening US-China relations are both adding to gold's safe haven appeal. Central banks are continuing to print money, which increases fears that record inflation levels or even hyperinflation is just around the corner. A contrary view is that money printing could lead to stagflation. This is a rare combination of poor growth and rising inflation that erodes the value of fixed income investments. The consequence of either is that in addition to safe haven appeal, investors are buying gold bars and coins for diversification and as a hedge against falls in other investments. Finally, adding to all of these factors, the precious metal is denominated in US dollars, and a weak dollar generally increases the price of gold. The US currency's current weakness against the euro is therefore another major contributor to these record prices. The United States is currently the center of the global pandemic, with significant cases being reported daily and lockdown measures being reintroduced in many states. The once strong US economy is under one of the worst threats in its history and does not look to anywhere near, or should say, does not look to be anywhere near the end of its struggles. Despite the record high price, there are expectations that gold could climb still further. Mark Mobius, co-founder at Mobius Capital Partners, said in a Bloomberg TV interview, quote, "I would be buying now and continue to buy," unquote. As long ago as April, Bank of America Corp raised its 18-month gold price target to $3,000 an ounce. Its head of commodities and derivatives research, Francisco Blanche, said, quote, "The global pandemic is providing a sustained boost to gold," unquote. He added, "Moreover, as China's GDP quickly converges to US levels, helped by the widening gap in COVID-19 cases, a tectonic geopolitical shift could unfold, further supporting the case for our $3,000 target over the next 18 months. The current forecast of $2,000 per ounce by the end of 2020 looks more than achievable following this morning's gains. Gold has barely fallen back from its record and is at $1,941 per ounce at the time of writing, needing only a further $60 to reach that milestone, one which few would have expected at the start of the year. It is a momentous day for many gold bulls, and the new record may not be held for long given the current momentum in precious metals." Unquote. That's the end of the article, with which we fully agree. Unlike the pumpers, we do not see 5,000 or 10,000 or 15,000 gold on the cards in the next 2 years. Similarly, we do not see silver reaching $100 in that time frame either. However, we do see a paradigm shift in where these metals are bottoming and confirm that there is another significant leg up to be achieved. There are, frankly, too many imponderables at present to accurately forecast gold and silver prices short term, as the article suggests, and so we won't attempt to do so. It would be folly and frankly dishonest of us to say this is where we think the prices are going to be, because we cannot factor in, to some degree, President Trump's rather interesting, shall we say, some may argue chaotic, relationship with China, and also what actions he may take, as he is considerably behind in the polls at present, though this admittedly may change, in time for the November general election. What we can say with a degree of confidence, though not omniscience, something we stated last year. We see this decade as the decade for precious metal prices. It won't be a sudden jump to astronomical levels, but will be a long but continual grind upwards. And that grind might be $100 in a month, so it's not so much a grind, it's quite a good move. But should be continual, culminating, in our view, in peaks closer to 2024-25 than 2020 or 21. What do you think? Do share your thoughts. Whether you agree or disagree with us, that is absolutely fine. The next few weeks are going to be crucial. And frankly, there are now, as already mentioned, so many imponderables. We are very bullish gold and silver prices, particularly gold, still more so than silver at the moment, but silver will catch up. It has done so with the gold to silver ratio falling to current levels, but we don't necessarily see silver moving 50-1. However, we could be wrong, and time will tell. Thank you so much for listening. If you haven't already done so, please subscribe to our channel and press the bell sign so that you're notified of our videos as and when they're published. And we had planned to produce a video on the Richard and Greg channel today, but that's been delayed till tomorrow. But that will certainly go up tomorrow evening. We hope you have found this video interesting and informative. And if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.